Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden truths behind the financial statements. And sometimes, well, it seems like this company is getting ready for a big party, an IPO party to be precise. Today we're diving into a Form 8K filed by Cantor Equity Partners v. Incorporated. Think of this as a snapshot of really important events that a publicly traded company needs to report right away. This particular filing is all about their first public offering, which is a massive milestone for any company. It is how they go from being privately owned to having their shares traded on a stock exchange for anyone to buy. And what a day it was for them. The big day here is the 6th of February 2026, when they officially became a public company. This filing lays out the details of that initial public offering, or IPO as it is commonly known. It is like the company is announcing to the world, here we are, and here is how we did it. The company is offering what they call Class A ordinary shares. Basically, these are the shares that everyday investors can buy. They are priced at $10 per share. That might sound like a small amount, but when you multiply it by the millions of shares sold, it adds up quickly. Now pay attention to this little checkbox here. The company is identifying as an emerging growth company. This is a designation for newer, smaller public companies that get some benefits like a bit more time to get used to some of the financial reporting rules. It is like getting a grace period in school. The heart of this report is about the initial public offering itself. On the 6th of February 2026, Cantor Equity Partners v. Incorporated, which we'll call the company from now on, completed its IPO. They sold a whopping 115,000 Class A ordinary shares. They even had an extra 150,000 shares available because the people who helped them sell these shares, the underwriters, exercised an option to buy more. This whole process brought in a staggering $115 million in gross proceeds. That is a lot of money from selling shares to the public. To make this all happen, the company signed several agreements. One of the most important is the underwriting agreement. This is basically the contract between the company and the investment banks that are selling the shares to the public. It outlines all the nitty-gritty details of how the offering will work. They also signed what is called a business combination marketing agreement, which sounds like it is about preparing for future growth or mergers. Then there is a letter agreement involving the company, its top people like officers and directors, and a special group called the sponsor. This agreement often sets expectations and commitments from these key players as the company goes public and beyond. Think of the sponsor as the original backer of the company. Another crucial document is the Investment Management Trust Agreement. This is particularly important for companies doing an IPO through a special purpose acquisition company or SPAC, like it appears this might be. A big chunk of the IPO money often goes into a trust account. This agreement spells out how that money will be managed and when it can be used, typically for a future business combination. They also have a registration rights agreement. This gives certain shareholders, often the early investors or the sponsor, the right to have their shares registered with the SEC, allowing them to be sold in the public market. It is about making sure that those who helped start the company can also benefit from its public debut. There is also an expense advance agreement. This agreement likely deals with how the sponsor will help fund the company's expenses before it has significant revenue, especially during the early stages and the IPO process. And a private placement shares purchase agreement. This is where the sponsor buys shares directly from the company, usually at the same IPO price, but without the public market complexities. This is a way for the key investors to show their continued commitment. Finally, there is a promissory note. This indicates that the sponsor might have lent money to the company, and this note outlines the terms of that loan, possibly related to working capital needs. Speaking of those private sales, item Sending details that alongside the IPO, the company sold Sentien Class A ordinary shares to the sponsor for 10 million per share, raking in another 10 million. These shares are basically the same as the public ones, except the sponsor has agreed not to sell them for a period, often about censure days after the IPO. This is a common practice to avoid overwhelming the market right after the company goes public. The company is saying these shares were sold under an exemption from registration, meaning they didn't have to go through the full public registration process for these specific shares. Relying on Section C(a) of the Securities Act of 1995. This is typically for transactions that do not involve a public offering. Now, on the 5th of February, the company also filed its amended and restated memorandum and articles of association. Think of this as the company's updated rulebook, its constitution. Anytime a company goes public or makes significant changes, it needs to ensure its foundational documents are up to date. This filing just makes sure everything is in order with the authorities in the Cayman Islands where the company is incorporated. Under other events, we see where all that IPO money is going. A total of $115 million, which includes proceeds from the IPO, and that private placement has been placed into a US-based trust account. This account is managed by Continental Stock Transfer CAMP Trust Company. This is a super important detail. For companies like this, especially SPACs, the money raised in the IPO sits in this trust, and it is not released until the company achieves certain goals, mainly completing a business combination or merger. There are conditions about shareholders getting their money back if they don't approve certain moves, or if the company can't find a business to combine with within a set timeframe, usually around 24 months. They also issued press releases. One on the 4th of February announced the pricing of the IPO, which means they set the $10 per S-share price. And another on the 6th of February, the actual closing date, announcing that the IPO was complete and they were officially a public company. This last section just lists all the documents called exhibits that support everything mentioned in the report. It is like the appendix to a book containing all the official paperwork. Now, let's look at what this all means. Cantor Equity Partners VI Incorporated has successfully executed its IPO, raising a substantial amount of capital. This gives them the financial firepower to pursue their strategic goals, which, given the trust account details, likely involve finding and acquiring another business. The fact that they've structured it with a trust account and defined timeline suggests they are operating under a SPAC model, which aims to bring a private company public in a structured way. The key risk here, as with any SPAC, is execution. They have a limited time to find the right target for their business combination. If they don't, the money might go back to investors, and the company's efforts up to this point wouldn't have achieved their ultimate goal. The performance of the Class A ordinary shares in the market post IPO will also be a critical indicator of investor confidence. As an emerging growth company, they have some breathing room, but the clock is ticking to deploy that capital effectively. The overall direction seems to be focused on growth through acquisition, and the success of this strategy will hinge on smart deal making and market conditions. Alright, that is our breakdown of Cantor Equity Partners VI Incorporated's latest filing. What is your take on this IPO and what it signals for the company's future? Do you think they will find a good business to combine with? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.